Ladies and gentlemen, good day and welcome to Oriental Aromatics Ltd Q1FY27 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you and over to you, ma'am.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations of Oriental Aromatics Ltd. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the first quarter of the financial year 2027. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decision. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Dharmil Budani, Chairman and Managing Director, Mrs. Shamal Budani, Executive Director, Mr. Parag Satoskar, Chief Executive Officer, Mr. Girish Khandelwal, Chief Financial Officer, and Ms. Kiran Preetfield, Company Secretary and Compliance Officer. Without any further delay, I request Mr. Dharmil Budani to start with his opening remarks. Thank you and over to you, sir.
Thank you, Purvangi. Good afternoon, everybody. It is a pleasure to welcome you all to the quarterly earning call of Oriental Aromatics Ltd. Quarter 1 represents a positive start to the financial year for the company. Our performance during the quarter reflects healthy year-on-year growth in revenue and volumes, improved operating efficiencies, and a sequential recovery in profitability. While the external environment continues to remain challenging and input costs remain elevated, the direction of our performance is encouraging. Our diversified presence across flavors, fragrances, specialty aroma ingredients, and camphor and terpene chemicals continues to provide resilience across market segments. Our Executive Director, Mr. Shamal Budani, will now take you through the operational performance and key developments during this quarter. Thereafter, our CFO, Mr. Girish Khandelwal, will brief you on the financial highlights. Over to you, Shamal. Thank you.
Thank you, Dharmil. Good afternoon, everyone. Q1FY27 has been an encouraging start to the financial year, with healthy year-on-year growth in revenue, productions, and sales volume, accompanied by a sequential improvement in operating margins. Our consolidated revenue from operations for the quarter stood at approximately 260 crores, compared with approximately 226 crores in the corresponding quarter last year, representing growth of around 15% year-on-year. More importantly, this growth was supported by a strong increase in physical volumes. Total sales volume increased by 22% year-on-year, while production volumes grew by 18% year-on-year, reflecting healthy manufacturing utilization, improved operational execution, and sustained demand across our key products categories. On a sequential basis, product volumes remained broadly stable. This was primarily attributed to the changes in product mix and the normal quarterly seasonal movement across our three businesses. Our EBITDA margins for the quarter stood at 7.62%, representing an improvement of 71 basis points sequentially from 6.89% in Q4 FY26. This improvement was supported by a favorable product mix, improved sales realizations, and the benefit of operational efficiency programs undertaken across our manufacturing locations. While EBITDA margins were marginally lower than the corresponding quarter last year, primarily due to higher raw material costs, we believe the sequential improvement reflects the direction in which the business is progressing. Now let me take you through the performances of our three business. Fragrance and Flavors division continues to deliver a resilient performance during the quarter. Demand across our key customer categories remained healthy, and we continue to deepen our relationships with existing customers while progressing new business opportunities across both domestic and international markets. Production and sales volumes at Ambernath were marginally lower year-on-year during the quarter. The primary reason for this was the seasonal nature of business and should not be viewed as a change in the underlying direction of the division. Our brief pipeline remains healthy, and we continue to focus on expanding customer relationships, increasing wallet share, and converting development projects into sustainable commercial businesses. Our specialty aroma ingredients business delivered healthy year-on-year growth in both productions and sales volume during the quarter. However, the broader global market for ingredients continues to remain highly competitive. Capacity additions, particularly across Asia, continue to exert pressure on selling prices for several products. The industry remains a buyer's market across many ingredients categories, with customers continuing to expect competitive pricing together with high quality, innovation, and security of supply. At the same time, several natural and petrochemical-derived raw materials continue to remain elevated, creating an environment where input costs remain firm while finished product pricing continues to be competitive. Our response continues to be disciplined and structural. We continue to focus on process re-engineering, yield improvement, energy optimization, internalization of intermediaries, and greater utilization of our multi-chemistry manufacturing platforms. These initiatives are intended to improve our cost position independent of any future recovery in the pricing cycle. We also remain selective in the business that we pursue. Our objective continues to be protecting market share and customer relationships while maintaining an appropriate contribution margin. The strength of our business lies not merely in individual molecules, but in the breadth of our portfolio, our chemistry capabilities, our integrated quality and regulatory systems, and our long-standing relationships with leading global fragrance companies. The Camphor and Terpene Chemicals division recorded strong year-on-year volume growth during this quarter. Q1 normally marks the beginning of inventory build-up ahead of the festive demand period in Q2 and Q3, and the volume performance during the quarter provides a constructive foundation as we enter the stronger seasonal period. Nevertheless, the domestic camphor market continues to face structural overcapacity arising from significant manufacturing capacity additions over recent years. Our focus therefore remains on those areas where Oriental Aromatics possesses clear competitive advantages: consistent quality, regulatory compliances, pharmaceutical-grade camphor, strategic B2B relationships, and the continued strength of our Saraswati and Three Pine consumer brands. Mahad facility. The Mahad facility continues to progress through the commercialization and customer qualification phase. We have consistently explained in our previous investor interactions, specialty aroma ingredients follow a longer commercialization cycle involving technical validation, customer qualification, and commercial allocation before regular business commences. Customer feedback continues to remain encouraging. Commercial shipments are progressing, and the facility is now participating in several global sourcing programs and RFQs, which should support a gradual build-up in commercial volumes. At the same time, we continue to maintain a realistic perspective. Mahad has not yet achieved the utilization levels required to fully absorb its fixed operating cost and therefore continue to impact consolidated profitability. Our objective remains to progressively move the facility towards 75 to 80% utilization, where we believe Mahad will become EBITDA positive and begin contributing meaningfully to consolidated profitability. Mahad remains a strategic long-term investment. The infrastructure has been created not only for current product portfolio, but also for future expansions and additional molecules. We therefore continue to evaluate this investment from a long-term strategic perspective. Operating environment. The broader operating environment continues to remain mixed. The long-term trends towards premiumization across personal care, home care, and fine fragrances continue to remain intact. We believe this structural trend, when compared with Oriental Aromatics' backward integrated business model, presents a significant long-term opportunity for the company. At the same time, customers continue to exercise discipline around inventories and working capital, while security of supply has become increasingly important in an environment characterized by geopolitical uncertainty and supply chain disruptions. Our integrated manufacturing platform, broad raw material sourcing capabilities, and backward integration into specialty aroma ingredients positions us well to participate in these structural opportunities while delivering consistent quality, innovation, and reliability to our customers. Raw material inflation nevertheless remains an area that requires continuous vigilance. Several natural, terpene-based, and petrochemical-derived inputs remain elevated. Wherever commercially feasible, we continue to work with customers to recover these increases while simultaneously improving our internal cost structure through operational efficiencies. Financial discipline. The improvement in the profitability during Q1 is encouraging, but further work remains. Our immediate objective continues to be improving operating margins while preserving volume growth and strengthening customer relationships. The company's net debt-to-equity ratio improves to 0.56 times as of 30th June 2026, reflecting our continued commitment towards disciplined capital allocation and prudent financial management. This significant investment made over the past several years have created meaningful manufacturing capacity and technical capabilities across our operations. Our immediate priority is therefore to maximize utilization and improve profitability from the existing asset before undertaking any major expansionary investments. As we look ahead, Q2 and Q3 continue to be seasonally important quarters for several parts of our business, including camphor and consumer fragrances. The momentum established during Q1, together with our active customer pipeline and improving operational efficiencies, provides a constructive foundation for the quarters ahead. However, we remain mindful that the raw material costs, foreign exchange movement, geopolitical developments, and competitive pricing continue to influence the operating environment. Our priorities therefore remain unchanged. Sustain volume growth while strengthening market share across all three businesses. Continue improving margins through product mix, process optimization, and disciplined cost management. Accelerate customer approvals and commercial allocations for Mahad. Maintain prudent capital allocation and maximize return from our existing manufacturing assets. Continue investing selectively in R&D, fragrance creation, application, and new product development to strengthen our long-term competitive position. To summarize, Q1FY27 represents a positive start to the year. We have delivered healthy year-on-year growth in revenue, production, and sales volume, improved profitability sequentially, and strengthened our operational performance, while remaining disciplined in navigating a challenging external environment. The direction of travel is encouraging. Our focus now is to convert this operational momentum into sustained improvement from profitability, capital efficiency and long-term shareholder value through disciplined execution over the coming quarters. Thank you. I will now hand over to our CFO, Mr. Girish Khandelwal, for the financial highlights. Over to you, Girish.
Thank you, Shamal. Good afternoon, everyone. And let me begin by sharing our consolidated financial performance for Q1FY27. During the quarter, the company reported operating revenue of rupees 260 crore, representing a healthy 15% year-on-year growth, reflecting sustained demand across key products categories. On a sequential basis, revenue declined by 8%, primarily due to the changes in product mix. EBITDA for the quarter stood at 19.8 crore compared with 19.46 crore in the previous quarter and 18.06 crore in the corresponding quarter of previous year. EBITDA margins improved to 7.62% from 6.89% in the previous quarter, supported by improved operating efficiencies. Compared with 8.01% in Q1 FY26, the margin was marginally lower, primarily due to higher raw material costs during the quarter. Profit after tax stood at 2.51 crore compared with previous quarter 3.98 crore and 0.5 crore in the corresponding quarter. The company continued to maintain a prudent capital structure with the net debt to equity ratio improving to 0.56x as of June 30, 2026 compared with 0.58x as of 31st March 2026. Cash profit for the quarter stood at 10.2 crore compared with 8.72 crore in the corresponding quarter of the previous year and 11.72 crore in the previous quarter. With this, we can now open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question, sir. So, my first question is in terms of the utilization level and our peak potential regarding the revenue side. So, what is the current utilization right now for the overall business and for the Mahad plant? And with the peak utilization level of all these plants, what sort of revenue number we will be looking at, and possibly by when that should be achievable?
So primarily, I think the Mahad plant currently we are looking at a capacity utilization of between 50 to 60%. If you look at the specialty aroma ingredients division and the camphor and the terpene chemicals plant, except the hydrogenation facility, most of the other plants are at between 85 to 90%. And the fragrance compounding facility, we have substantial additional ability to increase production. So, in terms of capacity utilization, the Mahad facility is something where we feel that in the next a few quarters, we will have a better utilization of the Mahad facility.
And with this full utilization, what sort of number we will be looking? Because 1,000 crore is something which we had done last year. And what kind of further possibility of revenue addition is there left with this full capacity utilization?
So I probably can give you a near-term number. I mean, we are looking at a
at a trajectory of anywhere between 10 to 15% growth in our sales in the next 1 year. So that's our near-term goal. And I think in terms of our long-term strategic goal based on projections, you can reach out to Girish and he probably can share the numbers.
Sure, sir. Sure. Next,
sorry to interrupt, Mr. Sinha. May we request you return to the question queue for a follow-up question? Thank you. The next question is from the line of Subhi from Trinetra Asset Managers. Please go ahead.
Hi, sir. So my question is that, we're looking at some favorable product mix. So if you could just talk a little more about that. How much are the margins and how will that look like? That is my first question. And my second question is about the raw material price pressure. How are we looking at the coming quarters regarding that?
So I think an answer to your margins question is, frankly speaking, looking at the crystal ball, because the global geopolitical situation is having an impact on the availability and the pricing of all your inputs. And hence, we probably can only state that we are extremely mindful and we are very watchful of the situation, and we are taking very calibrated steps to ensure that we strike a balance between raw material availability so that all our sales are fully catered for and the raw materials are available at the lowest price. So I think to answer your question on margins, it's something which is very fluid currently. In terms of the impact of the raw materials, I think from a trend perspective, we see that all the alpha-pinene based raw materials will tend to be expensive because of the sustained increased pricing in alpha-pinene. The petro again remains in a seesaw situation where the prices have been very firm in the last few months, then they came down for a month. So to answer your questions, I think in terms of margin, in terms of the impact, it's something which is an ongoing process, and we are watching the situation very, very closely on the raw material side, on the utility side, and also on our sales side.
Sure, sir. Thank you. This was helpful.
Thank you. The next question is from the line of Rajesh Mishra from Liberty Security. Please go ahead.
नमस्कार सर, राजेश मिश्रा बात कर रहा हूँ. Congratulations on great set of result. I had two questions. First is, लास्ट मीटिंग में सर आपने बताया था कि कैंपर के इंपोर्ट के प्रतिबंध के संबंध में सेंट्रल गवर्नमेंट के साथ चर्चा शुरू की गई है. कृपया इन चर्चाओं की वर्तमान स्थिति से हमें अवगत कराएं तथा यह भी बताएं कि सरकार की ओर से कोई आगे की प्रगति या प्रतिक्रिया प्राप्त हुई है कि नहीं. सेकेंड क्वेश्चन हमारा है कि मैं यह जानना चाहता हूं कि कपूर के सेगमेंट में हमारा रिटेल एफएमसीजी सेक्टर का कितना परसेंटेज है, से 50-50% और एनी अदर फिगर्स.
सो मिश्रा जी, हमने पहले कॉल में आपको सिर्फ कहा था कि हमारी एक मीटिंग हुई है विद गवर्नमेंट रिप्रेजेंटेटिव्स वेयर ओपन डिस्कशन हुआ था अबाउट कैम्फर एंड इट्स इंपोर्ट्स एंड इट्स इम्पैक्ट. सो उसके बाद वो सब्जेक्ट पे और कोई डेवलपमेंट हुआ नहीं है ये क्वार्टर में. एंड रिगार्डिंग आपका जो दूसरा क्वेश्चन है, तो एज अ स्ट्रैटेजी हम कैटेगरी वाइज या डिवीजन वाइज ब्रेकअप देते नहीं हैं. सो मैं आपको आंसर देना चाहता हूं कि हमारी जो तीनों कैटेगरीज है, फ्रेग्रेंसेस, स्पेशलिटी अरोमा इंग्रेडिएंट्स और कैम्फर एंड टर्पीन केमिकल्स, उसका कंट्रीब्यूशन हमारे सेल्स में रफली 1/3 है.
ओके सर, थैंक यू.
थैंक यू मिश्रा जी.
ओके.
Thank you. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello. Good afternoon. Am I audible?
Yes.
Yeah, hello. So this quarter we had close to 22% sales volume increase, while the revenues have been 15%. So there was a dip in the realization of our products, and I think most of the pressure is coming from increased capacity. So with this 10-15% revenue growth that you're expecting, what sort of volume growth are we penciling in for that, and how much do you see the realization going further down?
So like I said that, Maitri, we find ourselves in a very interesting situation where some part of the volume growth that we saw in the quarter that just went by was the products that our customers had given us as allocation in Q1, and therefore they kind of decided to take them before the stipulated period in which they were going to buy it because of the geopolitical situations. So to answer your question, the gap primarily is driven because there was an increase in the raw material price. There was hastening in terms of the customers wanting the material early, and hence we see this gap. Going forward, our focus is always going to be to strike a balance and to ensure that we are targeting business where we see volume growth, where we see also this volume growth at a decent contribution in terms of profit margin. So that's our broad objective. I cannot share with you very specific numbers because these numbers across the three divisions keep changing month on month.
Got it. So far in Q2, have you been able to kind of have conversations with your customers on the pass-through of the price increase that we've taken in on the input side, or still there are contracts we're taking in on a lower realization while taking the hit on the margins from the input side?
Wherever it's been possible to do a pass-through, I mean, we've been very, very successful. And like we mentioned that we've in the specialty aroma ingredient space and in the camphor space particularly, there have been significant capacity additions in the Asian region, which kind of puts a bit of a challenge in terms of achieving a pass-through. Having said that, I think we have been in a position to kind of mitigate these challenges by, giving a step-up pass-through process to our customers to at least cover the foreign exchange impact as well as any raw material hike impact.
Got it, and that is very clear. And lastly, on the tax side, what sort of effective tax are we penciling in for FY27 and then for FY28?
Girish, you want to answer this because it's related to tax?
It is for us is around 25% only. Because in the parent only tax liability. There in the OSNs there is no tax liability.
So it's a 25% for the full year. That's what we're expecting?
Yeah. Yes.
Okay. Got it. Thank you so much.
Thank you. The next question is from the line of Anisha Dalal from Universal Capital. Please go ahead.
Hello.
Hello.
Yes, sir. Am I audible?
Yes, you are, ma'am.
Okay. First of all, congratulations on the performance.
Thank you.
In our last interaction, you mentioned that the industry is currently facing a demand-supply mismatch with significant new camphor manufacturing capacities that have come up in India. This has understandably put pressure on pricing and profitability across the sector. As a shareholder, I would like to give a suggestion that since all the camphor manufacturers are facing the same demand-supply imbalance, why don't the manufacturers come together to work towards as a common cause to the entire industry so that the prices can be corrected?
So Anisha, I would first like to thank you for giving the suggestion. I think the challenge being that since there is a demand-supply gap because of excess capacity, it becomes very challenging for the existing players to come together and develop a common strategy, especially when the final product market has a very limited CAGR. So the expansion that has happened is not linked to the CAGR capacity of the finished product, and hence it's going to be pretty challenging for the industry to come together and create a program for coming out of this challenge.
Actually, I'm asking for specifically the manufacturers who are, selling the camphor in the raw material prices.
Yes, ma'am, but it's wishful thinking, and we probably, I do not have an answer, because I can speak for my company, where I can see that there is this demand-supply gap, and everybody is trying to probably get a piece of the pie, which is not growing. So I don't know how we'll come at a strategy. But we have taken your view, and we'll see if there's something possible.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Moksh Ranka from Aramedge. Please go ahead.
Hello, sir. I wanted to understand regarding our brands, Saraswati and Three Pine. So, roughly speaking, how much their contribution would be to our camphor division?
So, Moksh, like I mentioned in the previous interaction with one of our investor friends, we don't give the breakup of individual subdivisions in our broad divisions. We broadly state the contribution of each of our three verticals.
Okay. Also, could you provide some color regarding the camphor pricing as compared to Q1 and maybe last year? And currently, what's the import pricing difference between China? Has it narrowed down, or what's the scenario there?
So there is substantial double-digit growth increase in the price of camphor powder regarding Indian camphor. We do not follow a lot of camphor that is coming from China, so I will not be able to give you a very specific answer about that. In terms of Indian camphor, there is a very significant growth increase in the price of the sale price.
Okay, and any underlying economic reason behind it, because increased demand or maybe the input costs have become cheap? So any idea, any reason why the sudden increase in?
A very specific reason that a large contributor to the cost is a material called alpha-pinene, and the alpha-pinene prices over the past 5 months have gone up by almost 70% or 80%, and they continue to stay at this high price point.
Okay. Okay, and this is an imported raw material, right? So it would be in dollar terms.
Yes, correct.
Okay, got it. And is there any scenario where we are seeing the prices cooling down, or are they firm still?
So normally we answer 2 questions, but I'll just probably answer this one. Right now, they continue to stay firm.
Okay, I'll get back in the queue.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for the follow-up, sir. One is on the export side. So normally we have around 32-33% kind of export contribution. So what was the contribution in this quarter, and how we are looking this figure to be end for the FY27?
So, Girish, I think the figure is not 30%. I think it's more than 30%. And
for the quarter, it is 35%, and previous financial year it was 33% actually.
Okay, great. So we will probably stay in the same range in terms of our export contribution going forward as well. We do not see a substantial change in the proportion of exports versus imports. Exports versus local sales, I'm sorry.
Got it. And secondly, sir, again, looking at the overall capex side, I think we have done decent capex in last 4-5 years, and probably I think we have completed the cycle. But if we look at the, the overall contribution or the peak potential where we go from here on, I think with 85-90% kind of utilization for the all other plants and Mahad roughly around 50-60%. So another maybe 60-70 crore would be added from Mahad, and the rest would be adding some 10-12% further. So we still reach up to, I think, 1400 kind of max level from here on. So what is the plan going forward, or how we should look at this growth for the next maybe 5 years?
So, Rohit, I think you miss a very important element in the Oriental universe, which is the fragrance division. So the logic of the capex over the years has not been to only benefit the company by selling the ingredients that we make in these investment-driven plants. These products which are now being made have been extensively used by our fragrance division. And I think that the growth that we expect because of that in our fragrance division, unless you do not capture that in the overall opportunity cost going forward, I think you will miss a very critical piece of the Oriental story. So, what has happened is our investor friends keep on looking at us only from capex, only from aroma ingredients, only from generic materials. But I think the underlying story is how is that eventually going to help our fragrance division to not only have a backward integration piece attached to it, but actually having a depth in terms of competitive strategic positioning, which will be a key value driver. And there, you don't need capex. There, you need the ability to create and sell at a right price.
Okay, so that means maybe probably our mix, which is around 33, equally among the three segments, that mix would basically going to change if we are more focusing on that fragrance or aroma business, right?
So, when that change happens, I promise you I will inform you on the investor call.
Okay, sir. Okay. And if one more question I can squeeze in, our overall R&D spend on annual basis would be how much?
I stand corrected on this one. The last time I checked, we were at anywhere between 3% to 4% of the sales. Girish, am I correct?
Because currently we are at around 2-2.5%.
Okay, great.
But we have control by.
Yeah. Rohit, the mantra is optimization everywhere.
Yeah. Got it. That's it from my side, sir. Thank you.
Thank you, Rohit.
Thank you. The next question is from the line of Saket Saurabh from Sagari Capital. Please go ahead.
Hi, am I audible?
Yes, you are.
Yeah. So I think it was mentioned that Mahad is operating at 50-60% capacity, and if I say subtract the standalone from Concall, it seems the top line contribution was around 3 crores from Mahad. So first of all, am I right? And if yes, then is it like we are producing and it is getting inventorized right now? So just needed one clarity on that. And second, while I think there was clarification on like it's a volatile environment, it's dynamic and all, but any color on is there a scope for improvement on margins? Because we have talked about doing all the right things, and for the last couple of years, even for certain quarters, initially it was tariff and all, but that margin has kind of stuck around 7-odd%. In fact, even on YOY, there was a minor dip. Even if I just look at standalone number, Mahad, I'm already removed that from the profitability number. So any scope for even improvement, say even the immediate term on the margin front? So, yeah.
So to give you a very clear picture, since we are on both sides of the coin, Saket, where we also make fragrances, so we buy aroma ingredients, and on the other side we sell aroma ingredients to global fragrance houses like ours. We found ourselves in a cycle in the last probably 12 to 16 quarters, where there has been substantial capacity expansion that has happened in Asia, primarily in China. And hence the availability and the pricing opportunity that existed a few years back has been challenged over the last few quarters. Okay, that's the reality of the market, and that's the reality of the generic aroma ingredients market globally, without any exception. And I can vouch for this because I also buy these materials on my fragrance side. As these capacities get utilized, as the fragrance business globally grows, we will see that there will be opportunities that will come up, and when these come up, we will be more than happy to grab them. Point number one. Point number two, I think the basket of products that we currently offer to our customers globally and in India, that basket keeps on expanding, and that basket gives us the ability to have a EBITDA at a basket level. So these two strategies put together, along with a very strong headwind in terms of capacities coming and pressure on pricing, we feel very confident that going forward, whenever there are opportunities in generics, we will be able to capitalize them. Having said that, the generics are already giving a lot of value to our fragrance division, from where we will see additional margin contribution. So these are the three broad pillars based on which we feel that margins going forward, whenever they come, we will be there to accept them.
And the Mahad one, 50-60% utilization leading to 3 crores of quarterly run rate. So are we inventorizing the production right now, or that doesn't tie in?
Yeah, so Mahad has gone through a phase where first we produced, then we inventorized, then we went through a slew of approvals, so the material started moving. Then we had the geopolitical situation, because of which one raw material became extremely challenging. And so when we got access to that raw material, we have again produced and we have inventorized. So that's why probably, and Girish could answer in terms of the numbers, but broadly what's happened on the ground is what I can tell you.
Right, Parag, right. No. So I'm just saying that the top line is 3 crore only, right? So my question is, say right now, is it like inventory buildup is there, or
yes,
everything that your product so far is?
Yeah. To answer your question, there is an inventory buildup which has been initiated because of probably a challenged access to one raw material which is petro driven. And that inventory, we are very, very confident that we will be able to sell it in the near future. Point number one. Point number two, also I feel from a communication perspective, the Mahad investment is not only for this one product. It's a very large site where we have just done phase one. And as Shamal mentioned in his speech, it's a long-term strategic investment done for a large number of products when we are ready to be installed over there.
Okay, so what kind of top line are we seeing, say, at least Q3, or when is the meaningful scaling up even in Visage for Mahad? Because if you recall,
I promise you that when it happens, we will be informing the investor community. We are trying our best. We are always saying that new products, and we have been in that cycle for the past 20 years. It takes anywhere between 500 days to 1,000 days for see the light of the day. So we are very confident, and we are seeing those early shoots of greenness happening where we have got approvals from a wide range of global customers.
Got it. And any color on, is there a remote possibility of...
We already have 3 questions that I have answered.
Okay.
So, we'll give an opportunity to some others.
Sure.
Thank you. Participants who wish to ask questions may press star and 1 at this time. The next question is from the line of Vinayak, an individual investor. Please go ahead.
Hello, sir.
Hello.
Hello. Sir, I just want to how did you manage in the raw material prices?
Sorry to interrupt. Mr. Vinayak, may we request you to use a microphone while asking a question? You're not that audible.
Hello? Hello, sir. Am I audible?
Yes, you are.
Yeah. I just have one question. How did you manage the significant volatility in raw material prices due to the West Asia crisis?
So I think it has been a combination of extremely vigilant communication with our existing suppliers and leveraging the long-term relationships that we have built over the past many years to ensure that whatever volatility happened, it has hit us probably the last, and it has hit us to the lowest possible extent. So combination of these 2-3 things, where I think we have a dedicated team which is looking at all our raw material portfolios in the fragrance as well as the other 2 divisions, and taking strategic decisions of what to long buy and what to short buy.
Okay, that's it from my side, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question of the day, and now I would like to hand over the conference to Mr. Dharmil Budani from Oriental Aromatics Ltd. for closing comments.
Thank you. Thank you all for participating in the earnings conference call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our IR managers at Valorum Advisors. Thank you.
Thank you. On behalf of Oriental Aromatics Ltd., that concludes this conference. Thank you for joining us, and you may now disconnect the line.